Hey guys, it's Eric with another Red Friday video. Make sure you subscribe by hitting that red subscribe button below, and make sure, like me, you wear your red clothing. Could be a red hat, could be a red sweatshirt, could be red whatever on Friday, so that people see and they say, that person loves veterans just as much as that person. It is a sea of red here every Friday at low VA rates. We bring in food and we celebrate how much we support and love our veterans. That's why we wear red. We try to educate future homeowners, current homeowners, people looking to use their VA benefits, and a lot of what we talk about can be applied to FHA and conventional loans, though we do focus here at low VA rates on our military homeowners. Today we're going to talk about how much money you should be saving up for closing costs, okay? None of us like to talk about money when it has to do with costs. You know, if I was talking to you guys today about money that we were going to just deposit in your bank accounts, well, you'd all turn up the speakers and say, let me hear it. But it is important. It is a reality. There are closing costs with mortgages, and let's talk about what you can do to be prepared and save some money up for that. So for a lot of borrowers hoping to get a VA loan, they always have this question, and it's around closing costs. Like, what are the closing costs being charged? How much should I save for my closing costs? Are you able to roll the closing costs into the loan or not? I want to answer some of those videos in this. I want to answer some of those questions in this video in detail, so that you can start planning now and save if that's what you need to do. Even if you do plan on rolling your closing costs into the loan, it's going to benefit you to start saving up now. So let's talk about what the closing costs are on a VA loan. Now, to start with, VA loans have what we call allowable closing costs and non-allowable closing costs, okay? So allowable and non-allowable, okay? There's both. And what this means is that there are certain types of closing costs that lenders can and cannot charge you. I want to talk first about the charges that can be charged to you, the veteran, when doing a VA loan. Origination fee, probably one of the most popular or most known closing costs in the entire mortgage universe, is the 1% origination fee. Now, it does not have to be 1%. It could be 0.5% or 1/4%. Maybe there is no origination fee, but this is typical and it is allowed to be charged to you on a VA loan. Of course, there's the VA funding fee, which we've talked about many times. That's the fee that goes directly to the VA. You do not pay that if you're a disabled veteran. Appraisal, okay? You got to get an appraisal on a VA loan, and the VA allows you to pay for that appraisal. You need title insurance. Inside of title insurance, there's normally recording fees and things like that. So I'm just going to put title, and that encompasses a handful of fees. Credit report. Even though the VA does not require you to have a credit score, as you know from watching our videos, they know that it is prudent for lenders to look at your credit history, if nothing else, even if they don't care about the credit score. They want to look at your credit report, and that costs us money. And we're going to look at that report. It costs us money to do so, so the VA allows you to be charged that fee. Okay? There are some situations in some properties where a septic or termite inspection is needed. You're also going to be charged that fee. Discount points. That's another really popular one. Discount points, especially in a market like today where interest rates are super low and everybody's refinancing. This is popular. You're allowed to pay discount points. You're allowed to be charged those. HOA dues and fees, of course, the VA allows you to be charged those fees. Okay, let's talk about fees that you cannot be charged. If I want to go get an attorney to review all of the documents before you sign them, and I get my own attorney, that's called a lender's attorney, you cannot be charged my attorney fee. So lender attorney fee. You cannot pay that. Real estate agent commissions. You can't pay the real estate agent commissions. Realtor commissions. Now, this is regarding a loan. It can't be rolled into your loan. If you're a veteran who owns a home and you want to go sell your home and you're going to go get the world's best realtor to help you get the highest price and sell your home quickly, of course you can pay their commission as the seller because you don't need a loan to sell the home. Understand? This can be confusing. As the buyer and the person getting the mortgage, if you choose to get a VA mortgage, you can't finance and pay in that loan real estate commissions, okay? Fees for appraisals that are requested by me, the lender, if I want to reconsider the value of your home. So if the VA appraiser comes back and says, hey, the home's only for $250,000, it only appraises for $250,000, and we know that it's worth more than that, so we want to go send out like a field review or an additional appraisal to really determine that value. Or it could be the other way. The VA appraiser comes back with a super high value for your home, which we think is a little inflated. If we decide to order, I'm just going to call it lender appraisal, okay, of our choice, that's our responsibility to pay that. We can't charge that to you. VA lenders can't charge that to you. Flood determination, if you're in a flood zone or not. We order on every single file a flood cert to determine if you're in a flood zone. We cover that. Can't be charged to you, okay? Because the VA is protecting you as veterans and is limiting the fees that you can be charged and those that you can't, I'm just telling you from years of experience doing VA loans, typically VA mortgages come with less closing costs. They're cheaper to get when you are comparing them to like a comparable conventional mortgage. Of course, there's exceptions to all rules, but that is something that I've seen time and time again, and I think most people would also have the same opinion. Most of the fees are variable, depending on where you live in the United States, how big the home is that you're buying, how much that home is going to cost you. So, keep that in mind. If someone's getting a $500,000 mortgage, their origination fee is going to be $5,000 if it's based at 1%. And the same thing happens for title. Now, credit report, that would be an exception to the rule. Whether you're buying $1 million home or a $50,000 manufactured home, the credit report costs the same. So some closing costs are variable based on loan size and home size. So even though the exact cost of these allowable fees vary, in general, there's a rule that says for VA loans, it's not even a rule. That's probably not the best term. As a generality, if you added up your origination fee and all the other allowable fees, you're going to find that somewhere between 3 to 5% of the loan amount. Back again to easy math. $100,000 mortgage. Well, you've got 1% for the origination fee. You've got 0.5% for your VA funding fee. If it's a streamline, that VA funding could be upwards of 3% on some loans. Your appraisal a few $100, discount points, maybe you chose to pay them. That's why there's this range of 3 to 5%. Well, that's going to be $3,000 to $5,000 depending on how you structure your loan. That's why you want to get and review what we refer to in the industry as an LE, or a loan estimate, so that you can get exact numbers. We're legally bound to give you a loan estimate. We want you to know what you're getting, and we want you to ask questions, as you have learned from all of our videos. So after you complete the loan application, we lenders are required by law, once you've given us enough information to create a loan estimate, you're entitled to get that, and we have to send it to you within 3 days of getting all of the information needed. Loan estimates should include a list of all of the closing costs that the lender is planning to charge you if you choose to go forward with the loan. Now, see, understand that loan estimate is not binding. It's not a contract. There's no reason not to get your loan estimate, because that's just giving you the ability to choose to proceed or not. But it will give you a much more accurate idea of whether or not you're going to need money at closing to cover the closing costs, or if you plan on rolling them into your loan, it will give you a better idea of how much is being added to the loan. So let's talk about rolling closing costs into your mortgage. As I mentioned in prior videos, one of the most incredible things about the VA loan is that you're almost always going to have the option to roll at least some, and in many cases, all of your closing costs right into the loan. That's when you hear there's no out-of-pocket costs, because if you structure the loan correctly, it's all financed in with your mortgage. That's very helpful if you don't have enough money to pay your closing costs at closing. Some people choose to do that. For VA purchases, however, which obviously, as the name suggests, that's the loan you're getting to go buy a new home for, the only closing cost that you're allowed to roll into your mortgage is the funding fee. That's it. All these other fees have to come out of your pocket. Now, I'm going to get to the trick where if you don't have the money, there's ways around that, but it's not through rolling them into your loan. So I'm going to explain that in a minute. For first-time VA borrowers, the funding fee is 2.3% of the loan amount. You don't have to come up with that. You get to roll it in. But if you're a borrower that has used your VA loan before, the funding fee goes up to 3.6% of the loan amount. Let me give you guys an example. Assume you're borrowing $300,000 for a VA loan and you're a first-time VA borrower, so you've never used your entitlement before. You can roll the $6,900 into your mortgage. That's reducing the amount of cash that you have to bring to the closing table, and it's reducing the amount of cash that's added into your loan, okay? Just first-time use, lower VA funding fee. If you had used your VA loan before, okay, it means that your VA funding fee is going to go up to $10,800, and because the VA allows you to roll that funding fee into the loan, that's $10,800 that if you weren't a veteran, or if the VA did not let you roll that into the loan, you'd have to have out of pocket. So it's an example of how powerful it is that the VA allows you to finance or roll in that funding fee. Now, if you've got the cash and you want to bring it, that's fine. On VA cash out refinances, if you have enough equity, you can use that equity to cover all your closing costs, including the VA funding fee. In a way, this is like rolling all of the closing costs into your loan. As long as the total loan amount, that's your loan balance, plus all the cash that you're trying to pull out of your house, plus your closing costs, remain below 100% of your home's appraised value, you can finance or roll into your loan every single closing cost on a cash out. Now, on a VA streamline, you've got a choice here. You can roll all of your closing costs into the loan if you'd like. And we see probably 99.5% of our streamlines every single month. The veteran rolls in 100% of their closing costs. There are no conditions or limits on that, as long as you're rolling in allowable closing costs. However, one thing to note about rolling these closing costs into your loan, as allowed by the VA, is that you do end up paying interest on all that money. Okay, so back to that example, I don't even remember, let's say it was like $10,000 in that funding fee, and I said you could roll the funding fee into your loan. Well, if you had the $10,800 to bring to the table, it would lower your loan amount by $10,800, and over however long you happen to be in your home, you're paying interest on a lower loan amount. If that makes sense, I think it probably does for most of you. So over the life of the loan, the longer you have that mortgage, it could end up adding thousands of dollars in extra interest paid. But again, you keep the money today, and that's that decision that you kind of have to make. So for this reason, if you've got the money and you can pay all your closing costs up front out of pocket, that might be recommended to someone that's very financially stable. You don't have to, however. So while closing costs can seem like a mystery to some of you guys, it's certainly not an exact science. We hope we've given you just enough information to estimate how much money you're going to need to save up to either bring all your closing costs to the closing table when you buy a home, or you're going to have a better idea of what you're going to be rolling into your mortgage. And maybe you're going to meet somewhere in the middle. Hey, I got $10,000 in closing costs. I got $5,000 in the bank. Let's roll some in and let's pay some out of pocket at closing. So if you got any additional questions about closing costs, specifically here at low VA rates, please give us a call. We're very transparent with all of our borrowers, and we would like to go over all of this with you. There is no obligation to borrow money from us if you call us. We certainly hope you do. We hope you trust us, and thanks for watching.